President Trump is now launching a sovereign wealth fund for the United States.
We're going to have a sovereign wealth fund, which we've never had. We have a lot of things that create wealth.
This has the potential to change the way that our economy operates, but most people have no idea of what a sovereign wealth fund is, how it works, let alone how you can profit from it. But that changes today. You can think of a sovereign wealth fund kind of like an investment account for the government. But instead of you investing your money to fund a nice retirement, the government is investing money to hopefully buy some nicer things for its citizens. I say hopefully because sometimes sovereign wealth funds can hit huge home runs, but other times it doesn't work so great. This is where a lot of people get caught up in the political side of these arguments as to whether it's good or whether it's not. I want you, as a financially savvy investor, to take it one step further and understand if this is going to happen, how can you find the investment opportunity? Because President Trump says that he wants the United States Sovereign Wealth Fund to be the largest one in the world, which means this could definitely move markets and create an investment opportunity for the people that understand it. And that's what I want to go over in this video. And to help you understand that, I'm going to break this video up into 4 parts. Number 1, I want to explain how sovereign wealth funds work. Number 2, how are they funded? Number 3, how does this create an investment opportunity for you? And number 4, what are the risks associated with that? So let's go through this one by one, starting with how sovereign wealth funds actually work. Sovereign wealth funds are not a new concept. Countries around the world have sovereign wealth funds, with Norway being the largest at $1.7 trillion. So the sovereign wealth fund is this giant pool of cash that's managed by a country's government. But what are they actually doing with this money? Well, read what Reuters has to say. A sovereign wealth fund acts as an investment account or as a development tool or a combination of the two. They are designed to be a nest egg, allowing current money to be deployed in a way that benefits future generations. So it really truly is kind of like an investment account. But instead of you managing your own money, it's the government managing the government's money. That way it can hopefully buy some nicer things, nicer stuff for the country and its citizens. But the real icing on the cake here is the goal is to be able to buy these nicer things without raising taxes and without going into debt. But I'll cover more about that when we get into the funding. The last thing that I want to go over when it comes to how these sovereign wealth funds work is what do they actually invest in, because these sovereign wealth funds can go out and invest in private companies, like say TikTok for example. They can also go out and invest in real estate in your own country. And they can also go out and fund public transit operations, which means these sovereign wealth funds are investing in pretty much anything that you could potentially invest your money in as well. And this brings me to number 2. How do these sovereign wealth funds get the money to actually go out and invest? And this is where I want to remind you, we're seeing a lot of changes happen in 2025 in our economy pretty quickly. And this is why on March 11th, 2025, I'm hosting a free workshop where I'm going to be going over, number 1, what are all the changes that are happening in our economy through things like Trump's economic policies and Doge and tariffs and artificial intelligence and technology, and then how do these things create an investment opportunity for you? It's a free workshop. It's a live workshop. I'm doing it twice on March 11th, once in the morning at 10:30 a.m. Eastern Standard Time, and again in the evening at 8 p.m. Eastern Time. So if you want to join me on this free, live, and virtual workshop on March 11th, all you have to do is register, because there's a limited number of people that can join me live. So if you'd like to join, I have the link for you down in the description below. So how do these sovereign wealth funds get funded? Well, according to Reuters, typically some or all of a country's budget surplus is passed to the sovereign wealth fund, which can then use it to fund new investments. That means that a government would collect these tax dollars, they would spend some of it, and then whatever money they don't spend, they invest. It almost looks like a balanced budget. You make money, you spend some of it, and what you don't spend, you save and invest. This is what Reuters says. But there's one problem here. The United States is not running a surplus. We're running a huge deficit, which is the reason why the United States is in deep debt, which means we don't have a balanced budget. We're generating money from taxes, we're spending all of that money, and then we're going into debt to fund even more spending. And so we have no money left over to save and invest. But then it gets even more interesting, because the Trump administration wants to pass huge tax breaks, which means in theory, we'd have even less tax dollars coming in here. So I'll draw a little downwards arrow. And we're talking about passing out these Doge dividend checks, which you can put it almost like a larger expense because we're giving some of that money back. Now I get it, it's supposed to be more like a tax refund, but just for simplicity, it's almost like we're raising expenses while cutting taxes. how are we going to go out now and start investing money when we're already spending more than what we're generating? And this is where I had to do a little bit of digging. And according to the Treasury Secretary of the United States, the plan is to monetize assets currently owned by the United States government, quote, for the American people. I'll explain what that means in just a minute. And then Trump also says that the plan is to use revenue earned from tariffs on US imports as a basis for the wealth fund. Again, we're in the very early stages of this, but what this sounds like to me is it sounds like the government is talking about selling off some of the federal land and then selling off some vacant government buildings and using that money from that sold assets. So the government land, the government buildings, using that to fund this, and also using some of the revenue generated from taxes as a way to fund this. Now, this can be a little bit confusing because we've also heard how we want to use the tariff revenue as a way to lower the income tax. Here we're also hearing how this tariff revenue can also be used to fund this investment fund. So you can start to see how it's a little bit confusing, but instead of generating a surplus, meaning spending less than what you're making, it sounds like the government wants to sell off some of their assets to have some new cash and then use this new cash to create a new investment fund. So it's almost like switching assets. Instead of owning federal land in these government buildings, we want to switch it into hopefully an asset that will produce a higher rate of return. So take that for what it's worth. Now that you understand the basics of how the sovereign wealth fund will be funded based off of the information that we have today, let's talk about how this can create a potential investment opportunity. Now here's the thing, there are a few states in the United States that have their own wealth funds. But to understand how this could potentially create an investment opportunity, I think what the best thing is to do is to look at some of the countries that have very large sovereign wealth funds, and let's see how it has played out over there. Norway has the world's largest sovereign wealth fund, and they take their profits from selling oil and they dump that money into their sovereign wealth fund, and then they invest that money in the sovereign wealth fund into things like equities, which are stocks. They invest in fixed income, real estate, and renewable energy. Saudi Arabia also has a very large sovereign wealth fund, and they use the money in the sovereign wealth fund to invest in public infrastructure. They invest in private startups, and they also invest in publicly traded stocks. For example, here's a fun fact. Did you know that Saudi Arabia's sovereign wealth fund is a very large investor in companies like Lucid and Activision and EA and Uber, which means yes, every time you get into Uber, you're making Saudi Arabia a little bit richer. So the question then becomes, how does this affect you and how can you find the opportunity here? Well, the more difficult option is you can go out and create an asset that gets money from the sovereign wealth fund. For example, Lucid, the car company, is in business today because they have raised so much from the Saudi Arabian wealth fund that it has allowed them to cover a lot of their losses. But going out and starting a business is obviously very difficult, but there is an easier way. Instead of you going out and creating the company, you could just invest in some of those companies. And this is where I want to go back to the basics just a little bit. Remember, supply and demand. Now, why am I bringing this up? Because the price of a stock ultimately depends on supply and demand. When you have more buyers than sellers, when you have more demand than supply, the price of a stock goes up. When you have more sellers than buyers, the price of a stock goes down. Yes, the profitability of a company can impact a stock's price, but a stock price doesn't go up just because the company is making more money. It goes up because a company is making more money, which can create more demand. If a company makes more profit, but people aren't buying the stock price can go down. The reason why I'm saying this is because if the United States government goes out and creates a sovereign wealth fund, and they've hinted that they want it to be very large, they want it to be the largest in the world, is what we've also heard, which means if we create this new multi-trillion-dollar sovereign wealth fund, and a piece of that is now being invested into the stock market or into companies in the United States, well, that could create more demand for things like stocks. Now, there's a good chance that the sovereign wealth fund will invest in different types of assets. Maybe some publicly traded stocks, maybe some venture funds, maybe some real estate, maybe some infrastructure. But if a big chunk of this goes into companies on the stock market, that could increase the demand and potentially increase valuations for companies that anybody is able to invest in. Which means there is a very good chance that the sovereign wealth fund could make investors even wealthier because it would dump more money into private markets. If asset prices go up, that benefits asset owners. So the creation of a sovereign wealth fund could, in theory, help the value of assets, which will benefit the asset owners. which means if you become an investor or if you are an investor, you are primed to benefit from the creation of something like a sovereign wealth fund because it can increase the valuation of things. Now, this doesn't mean that we're not going to see downturns. It doesn't mean that we're not going to see recessions. It doesn't mean that we're not going to see market crashes. They're a part of our economic system. But if a sovereign wealth fund is created, it could bring more dollars into private markets, which would benefit the prices of assets, which benefit the owners of assets. And if you're not an investor, well, this is more reason to become an investor. Now, again, there are so many ways to start investing, which go beyond the scope of this video. You don't have to go out and find the perfect company. You could just invest in something like the S&P 500, which is a group of the 500 largest companies in the stock market. Again, I'm just a random guy on YouTube. I can't tell you what to invest in, but here's a quick little hypothetical. SPY is an ETF. It's a fund that gives you exposure to the top 500 companies in the stock market. Now, instead of going out and trying to find all the best companies to invest in, you can invest in one ETF like this and get exposure to the biggest 500 companies in the stock market. So if you want to be an investor, it doesn't have to be difficult. You don't need a ton of money to start. I mean, you can start investing with as little as $100, but it is very important for you to start. That way you can win in our economic system, because our economic system is designed to reward investors. It's not designed to reward employees, and it's not designed to reward consumers. Period. Again, this is what I'm going to be going deeper into in my workshop on March 11th, and this is what my team covers in Market Briefs every day, which is my free financial newsletter, where we break down what's happening in the financial markets. So if you want to see those resources, again, I have those links for you down in the description. But this brings me now to number 4. What are the risks associated with this? And there's two parts to this. One is your risk as an investor, and the other is the risk to the government. When it comes to the risk to the investor, if you go out and invest in, let's say, the S&P 500, you go out and invest in an individual company, and we see a recession, we see a market crash, the risk is pretty obvious. Because we know the market crashes happen, the value of your investment will go down for that period. And if you invest in an individual company that goes bankrupt, you lose everything. This is where your financial education is very important, to know how do you actually analyze your investment, how do you find a good investment, how do you know when to buy, how do you know when to sell. But that's beyond the scope of this video. The risk now to the actual government that's creating the sovereign wealth fund is a little bit unique. Because if the government invests in something and loses a lot of money, what happens next? Well, this is where we don't have a very clear answer, because remember, in general, when we have a sovereign wealth fund, it's when a government takes their surplus, they take their profit, they take their leftover money after spending the tax dollars, they take what's left and they invest that money. Here, that's not what's happening. We have this huge national debt. It looks like we're still going to be running a national deficit, but we want to sell off some assets as a way to now build this sovereign wealth fund. So it's very unclear what would happen now if this were to go to zero per se, because we still have a lot of uncertainty as to where the money would be invested. See, the concern that I think everybody would have is what happens if your investment value goes down. Does that mean that you're going to stop certain government spending? Would that mean that you have to cut certain benefits? And in theory, the answer would be no, because these are two completely separate accounts. You have your emergency savings, you have your investment account, and you have your spending account, right? That's what a balanced budget has. The problem is we don't really have a balanced budget yet. Hopefully we'll get there or get closer to there. We'll see what actually happens. But right now, we are spending more than what we're generating, and so we're spending based off of debt. And if we're funding this without debt, then that's a good thing. But if we're going into debt to now fund these investments, well, you can start to see how that amplifies risk. And this is where we have a lot of uncertainty. If this is being funded by selling off other assets, then we just lose some value of our assets if it goes down. If it goes up, then the balance sheet goes up and all is good. But this is where we don't know exactly what's going to happen. And that's where it creates uncertainty. Because in the financial world, that's not the government, you have 3 financial statements. You have your balance sheet, income statement, and cash flow statement. Your balance sheet is your asset and liability. Your income statement is your profit and loss. Your cash flow statement shows how the cash flows through the company. Well, when we look at the balance sheet, your assets minus liabilities, that is what tells a bank how much money they're willing to lend to a company, because they want to see how many assets you have, subtracting your liabilities. If you have more assets, then they're willing to lend you more money. Well, we're selling off some of those assets and we're moving them here. That's what it looks like is going to happen. If that happens, that could potentially make the government more creditworthy if the value of those assets go up, and that could potentially mean that the government would go into deeper debt to spend more money here. Or what might be better financial planning is we take some of those profits to pay down the debts, that way we have less debt. So it depends on how we want to budget the finances for the government, but if we have a loss here, that can make the government less creditworthy, which would mean we have more liabilities than assets. That can become a problem, because that can make it even more difficult for the United States government to borrow more debt. That can make treasury yields go up, which to consumers means mortgage rates would go up, credit card rates would go up, which you can start to see how that could create a trickle effect. So yes, it creates more risk, but it also creates the opportunity for more wealth. Which one is going to happen? Only time will tell. But the more balanced the budget, the more better managed the budget, the better the chances you are to not have negative consequences from a sovereign wealth fund. And this is where time will tell what will ultimately happen. President Trump is now considering getting rid of the income tax. Take a listen.
As I said in my speech last week, instead of taxing our citizens to enrich foreign nations, we should be tariffing and taxing foreign nations to enrich our citizens.
The Fair Tax Act of 2025 was a bill proposed which would effectively abolish the IRS.